Hello everyone, this is a gold price action review for the last 1 week. Today is Friday 12th of December 2025. We want to look at the hourly time frame with the weekly time frame in mind, and also the daily time frame with the daily time frame as well. You can see I have this tool here. It's called opens. It shows when the daily, the weekly, the monthly or yearly opens. And the idea behind this is that price opens, forms a low, forms a high, and then closes, or price opens, forms a low, forms a high, and then closes. So I have this tool to help me when price opens in the weekly time frame, and also when price opens in the daily time frame. So today being Friday is the last day of the markets being live, and I want us to look at how one would have participated in gold price action, and how someone would have taken a trade here and there. So I'll start with the weekly time frame. The hourly time frame with the weekly time frame in mind. As I've said, price opens and forms a low, and then forms a high, and then closes. So you can see that this week, uh, beginning Saturday 6th, Sunday 6th, 7th, or 8th, 7th, yeah, price opened, formed a low, and then went up, and that is the what happens here. Price opened and then forms a low and then went up. And so with that in mind, how would we know when price is forming a low and when price is forming a high? Because you want to take a trade after the formation of that low or the formation of that high. And as you can see here, price opens right here and then goes up and then comes down, and then goes up again and then comes down. So the idea is we want to see price open and then close above a recently formed high or low, like this one, or a recently formed low like this one, right? And that would give us the basis or the idea that price might keep going lower or high. Or alternatively, we want to see price form a high and a low like this. So we have this high, and then we have this low after it has opened, and then after this formation of this high and price goes lower and forms this low, I want price to do two things: either to close below this low or to close above this high. If price closes above this high, I'm assuming this becomes the low of the week and price will keep going higher. Or if it closes below this low, then I assume this price here is the high of the week, and price is going to go continue or keep going lower. And in our case, you can see price failed to close below this formed low right here, and just swept that liquidity and then kept going up, came up here, and it didn't again go down until this high right here, when now price closes above it at this point, and this is the 1 hour time frame. So after this has happened, now we are looking for price to keep going higher. So this was kind of a consolidation. You can see this was kind of a consolidation right here, and then price broke out at this point. Now I'm looking forward to price retracing back into this zone, and then to keep going higher. And what will give me the idea that price is going to keep going higher is how price now will be reacting to fair value gaps that have been left behind. For example, now we had this massive fair value gap that was left behind as price was breaking above this high, and now that becomes one of my major fair value gaps to look at how price will react to it. Otherwise, the other fair value gaps would also be like these ones, though price has already balanced out that fair value gap. This one, price has already balanced out this fair value gap. Any other, we also have that. So all these others were fair value gaps that price had already balanced or price had already retested and filled. So with that in mind, then the only left behind, the only fair value gap we would look at is this one, which is pretty fresh. And yeah, we also had this tiny fair value gap, but you can see price just ran through it without anything. Yeah, so with that in mind, now we are looking at how price is going to react of this fair value gap, right? This might have been a false signal for someone to sell because this was a reaction of this fair value gap, but we already have price closing above the high, and our idea is, or our bias, the weekly bias is that price is going to go higher. So you're not trying to get sales at this point. Now with that in mind, we are looking at how price is going to react of this fair value gap, and we are looking for an engulfing candle from this fair value gap. And you can see this engulfing candle here is what gives us the idea that now this fair value gap is being respected and we want price to keep going higher. So after the reaction is now when you start looking for opportunities to buy. You don't buy because there's a fair value gap there. You wait first for price to react of the fair value gap, and then you look for now reasons to buy, and that is what you're going to do in the lower time frame. First of all, you mark this as a dealing range. You can see from here up to here, because this is looking for a way for when price closed above this high. There is a high of this bearish candle, and then now you go to the lower time frame and start looking for areas where you would have taken a buy trade. Now you can see that we do not have a change in state of delivery below the discount zone of this dealing range. I treat this as a dealing range. And then we also look at the 15-minute time frame to see where we had a change in state of delivery, and you can see we had one here, and this change in state of delivery is in the discount zone of this dealing range, right? And now with this in mind, now you can now simply take a trade at this point. Once price gets to this point, retraces and comes to this area, you take a trade there, stop loss below that low, and take profit. You can mark several zones because this is we are looking at the weekly time frame. We have this point here as your first take profit, and the second take profit at this point here, and you can see that was 5.68, and this was also 7.54, and this happened on Thursday. You can see now the entire week of just waiting for price to give you something solid, or a solid reason why you would get into a trade. It is only on Thursday you get an opportunity to get into a trade. Now you would have refined this further down into the 15-minute time frame and the 1-minute time frame, and even gotten a higher risk to reward ratio. Now in the 15-minute time frame, you can see this is our dealing range, and this is our the 1 hour fair value gap. But you can see this relative equal lows right here. This is liquidity that was swept, and this is a breaker block, the 15-minute breaker block formed before sweeping this liquidity resting below here before going up, and then price goes up, respecting that breaking above this high, these highs that I had marked, and then it retraces back to this breaker block and gives us an engulfing candle in the 15-minute time frame. Now you can see how we are refining this further down into the 15 into the one. We want to refine this further into the 1-minute time frame, and you can see we have this engulfing candle of this fair value gap, and this is a potential reason as to why you would want to get into a buy trade, because price is giving us a willingness to is showing us willingness to go higher by respecting this value gap. Now we again repeat the same process. We are looking for a change in state of delivery in the discount zone of this dealing range. We are treating this as a dealing range, right? So the discount zone of this dealing range, we have a change in state of delivery at this point right here. The last candle right here that gave us this low, and then this candle gave us a high, and right there we have a change in state of delivery. So this is now another entry area or another entry criteria like that. You can go further down into the 1 minute time frame and now look for areas where you have bottom wickless candles in the 1 minute time frame, and I looked at them. We had another one here. I can give it a different color, and this one here, and these are entry areas for longs or for buys, right? So you are waiting for price to come to the discount zone of this dealing range, and these levels are your entry areas. This one, this one, and this one, and you can check to see if price ever came back to those areas, and you can see this is what happened. So price came all the way to this spot, this one and this one, and with our stop loss right below this. Let's take for example this top level here as an entry. Stop loss just below this low here that gave us that dealing range, and then again the previous target zones that we had marked, right? You can see the first one was here, which gave us a risk to reward ratio of 9.69, and the second one here at a risk to reward ratio of 12.75. Again, this is a trade that happened on Thursday. So you can see how you would have participated this with the weekly time frame in mind. Now the weekly time frame tells us that let me go to the 15-minute time frame. Price opened, can try using this. Price opened here, went high, and then went low, and failed to close below this low. Came here, failed to close below this high, and came down, failed to close below this low, and then finally closed above this high. At this point, we are assuming this point here or this point here, let me just reprise this point here is going to be the low of this week with the weekly time frame in mind, right? And then now at this point you are looking for price to keep going higher, and that is how now we get into this retracement and a buy to go higher. With that in mind, this becomes our target, and also this previous high and this also high here becomes another target. So that is the idea behind this trade. Now quickly going to the daily time frame, but I'll still stick to the 15-minute time frame in mind, right? 15-minute time frame, but with the daily candle in mind. I call it the new day open model. The new day open model is price opening, forming a low or a high, and then going either side depending on what price wants to do. And that is what I have with this this is the fifth. No, I'll go to the 5-minute time frame for this, so that we have a clearer price action or clearer candles. So you can see here the new day open, which is today, Friday, opens, right? And then price goes lower. As price is going lower, now the idea is price should close above this high or close above below this recently formed low right here, right? And our price closes below this low, but you can see this candle here, there is no high at this point. So this, in the daily time frame, this becomes a top wickless candle, and price has to eventually come back to it. So at this point, I'm not trying to look for sells because there's no high on this candle. Price has to either form a high or a low. So as price keeps going lower, I'm assuming that it is forming the low of today or the low of the day. And I'm looking now at which point will price give us a change instead of delivery, right? You can try using a 15-minute time frame. At what point does price give us a proper change instead of delivery, right? So we can see at this point is when we have this low, and we want to see if price will give us a reaction of this fair value gap, this 15-minute fair value gap, right? And you can see price opens, comes to it and reacts off and closes above it, and we are assuming this is going to be the reason why price keeps going higher. So let us look at it in the 15-minute time frame. And now we have a very strong engulfing candle from this fair value gap right here, this engulfing candle right here. And in the 30-minute time frame, that will be probably a reason why you want to engage now price at this point and look for buys. Yeah, because you are assuming this right here is the low of the day and your price is going to keep going higher. So at this point, go to the 15-minute time frame. Let me look at it in the also in the 1 hour time frame. Yeah, I can see that. So 15-minute time frame, we have a change instead of delivery at this point. That becomes an entry area. You can drop further down into the 15-minute time frame and look for any other reason why you'd want to buy, right? And now that would be are there any value gaps that are not balanced, or in the 1 minute time frame are there any wickless bottom wickless candles that do not have wicks, and that becomes your entry. Let's check if we have any, and yes, I think we had a couple of them. We had this, and these two candles are in the discount zone of this dealing range. Discount zone of this dealing range. Always use the discount and premium zones, right? So with that in mind, now we mark those areas as our entry areas, right? This one also, this change instead of delivery, and these wickless candle right here. So these two wickless candles and these are our levels of entry. And now after price has given us that, we want now to look for buys, right? These areas are our entry areas. Stop loss will be at this level here, and you can take that trade at that point. If you take this they're too close to each other. Let me try and zoom out. If you take this trade at the lowest entry area right there, stop loss below this area, and let me just remove this. Targets are, which are targets? These ones. The first target is here and the second target is here, right? And then you can zoom further back into price to see where would have other targets been. Trying to see, you can even go to the 1 hour time frame, right? So previous price action does not give us clearer targets, so you can just use these two, right? And with that in mind, this was just sufficient enough to give you this trade, right? So just above this high, above this opening price, not high, opening price, and now you have this price going up, giving us a 4.55R. Going to the lower time frame, you would have now managed this trade further by looking at how price is reacting off fair value gaps above the opening price, which is this green line right here. So how is price reacting off these fair value gaps? You can see this one here, you have this value gap and engulfing candle to the a bullish engulfing candle, and now you have a reason to keep holding this trade further up. right? And then we look for any other. You also had this fair value gap, bullish candle reacts to it and then goes up. What else? This one was disrespected, so this was also a continuation of the same. So again going up, and also we look at this fair value gap right here. How did price react to it, giving us a bullish engulfing candle or pattern, and then you keep going higher and higher, and then another one again. So this is how you manage a trade. You look at how price is reacting off these fair value gaps, and then you take your trades off there. So bullish engulfing pattern, you keep going. Another reaction here, bullish engulfing pattern, and keep going until at this point where now you have price now closing below this low that gave us this reaction from this point, and probably this is now where you would have taken that loss, because you would have set your stop loss at this point. If you had held this trade the entire day, let us look at how much someone would have made up to this point where price is closing below this area where your trailing stop would have been set, right? So this is now almost 15.7 R risk to reward ratio of just holding, because this entire price is just above the opening price, and we are assuming price will keep going higher until now when you get satisfied with the results you get. So that is how you would have participated in XAUUSD gold price action this week and also today. This is based on the basic foundation that price opens, forms a high, forms a low, and then close, or price opens, forms a low, and then forms a high, and then closes. It's that simple. Bye bye. I'll see you next time.